Thank you, Bill, for that market update. I hope you guys can see my screen. I want to just highlight something that Bill mentioned. And I don't know the exact phrasing he used, but what it boiled down to is that it's not going to be a crypto market anymore, potentially. I mean, that's what we're already seeing, but rather a market of cryptos, meaning what exactly what Bill said. You're going to have to pick the correct cryptocurrencies, and if you don't, the market will punish you. You're also going to have to pick the correct entry points, and that's where some of my analysis is going to be coming in. This is total cryptocurrency market cap. If you bought anything, this is all cryptocurrency, Bitcoin plus all altcoins. If you bought somewhere back in May of 2020, or even you caught the dip off of the pandemic news back in March of 2020, it does not matter what cryptocurrency you bought. 99.9% of cryptocurrencies you made money on year over year to the peak in March of 2021. And you had very, very little volatility. I mean, the steepest, nastiest corrections were 25%, and which is really, really nothing, not bad at all. Now, look at the change in the crypto market that we've had since May of 2021. We've had extreme swinging volatility, extreme volatility. These corrections have been really, really rough. We've seen cryptocurrencies that were overvalued in May of 2021 just not completely bounce back. Yet we're still in a bull market, enough so that individual cryptocurrencies like Luna, like AVAX, like Phantom are making new all-time highs. They've bounced back and they're printing money. So if you're in the correct cryptocurrencies at the correct entry points, you can make tons of money on these up moves. But if you pick the wrong cryptocurrencies, not only are you not making money, you're losing money, right? In May, if you bought in May of 2020 and you were in this bull market, the consequences of picking the wrong cryptocurrencies was that you just made a 2 or 3x instead of a 30x, right? So the punishment really wasn't that bad. You still tripled your money, right? So it's really, really important to identify some of the narratives that we're seeing and jump into those narratives and be willing to be a little bit more flexible in terms of trading in and out of cryptocurrencies, at least. And this isn't financial advice. And if you don't know what you're doing trading and you don't know how to set a stop loss, that's fine. We still want to zero in on really, really good entry points for even some of our longer term investments. So, right now, I'm going to jump into several coins that are in the DeFi sector. And I strongly believe that this DeFi sector is seeing a comeback. It's seeing a renaissance, as Bill mentioned, right? Yearn Finance, Sushi already bouncing back upwards. Chainlink is actually down compared to its all-time high of $52, $53. Its May high has not recovered yet. It's actually pretty low. But what I've done is I've kind of drawn this long-term channel for you. And I think Chainlink is just a very strong accumulation play. I'm not going to give you extremely specific entry levels like I am for some of these other cryptocurrencies, because Chainlink almost doesn't trade quite like that. It almost trades poorly over shorter term time frames. It's a little bit more erratic. However, if you just look at the long term time frame, we're trending upwards. And what you'll notice right now is we're actually at the bottom. We're at the bottom of this trend channel. And historically, that's just been a phenomenal place to accumulate Chainlink, right? So I think Chainlink right now is one that you can just accumulate in for under $26, $27. I think that is the inherent value of Chainlink currently as it stands from a technical analysis perspective, based on calculating the margin pressure levels from our high and our low. We kind of have these two lines in here that are, I'm not going to go into exactly how I calculate these margin pressure levels. I've done that plenty of times on this channel in the past, but basically suffice it to say $26 to $27 is kind of a magnet for the price. And when price for Chainlink is under this level and bouncing off of this trend line, I think this is a fantastic place to accumulate Chainlink. Anywhere between the bottom of this trend line, around 17, all the way up to maybe $23, and below this $26 to $28 range, right? So that's where I'm looking to accumulate Chainlink. I personally just bought some today. I prefer to buy on the trend line. We are a little bit over the trend line, but we're still in the bottom of this overall channel. And if we saw Chainlink move back towards the middle or the top of this channel here, I'll just give you a scenario where maybe it just comes back to the middle of this channel sometime in Q1 or Q2 of this year. We're looking at $60 Chainlink. We're looking at a new all-time high. If it were to get back to the top of this channel this year, we're looking upwards of the high $100s, right? So just under $200. I'm not saying that's where it's going. I'm just saying that right now, while Chainlink isn't the talk of the town, it's giving really, really good entry points. And what you'll find is that if all you're hearing on YouTube and Twitter is Chainlink, Chainlink is the future. It's going to change if that's all you're hearing, chances are we're at the top of a range, right? And the risk of buying in at that range when it's overbought and everybody's buying it, everybody has Chainlink in their portfolio. Not only does everybody have Chainlink in their portfolio, but it's a 20% allocation in everybody's portfolio. That's the wrong time to buy. The right time to buy is when nobody's talking about it. The only people with Chainlink in their portfolios are the Link Marines, right? The people that believe in it a long time and have believed in it for a very long time and have been buying all along the way at prices much, much lower than what we're at today. So Chainlink, solid fundamental cryptocurrency with good tokenomics and phenomenal use case, undervalued right now against its key support and resistance levels around $26 and $27. Next up is Phantom, and it's a layer one solution, so it's not a DeFi dApp or application per se. But what we're seeing with Phantom TVL is a lot of TVL moving into Phantom in the form of DeFi being built on Phantom, and in the form of projects integrating Phantom onto their applications, or moving their applications and making them compatible with Phantom, right? So if we look at DeFi Llama here, this is just total value locked in all these layer one solutions. If we look at all TVL, we've been flat really since November. We've been flat for roughly the last 2 months, around 254 billion. If we look at Ethereum, right, we've kind of been declining in a bit of a bounce back, but overall pretty flat. Terra Luna went parabolic, but it's since cooled down, come down. It's dipped all the way down here to 18 billion. It's back up to almost 20 billion, right? But kind of in a bit of a slump off of this most recent push. Binance Smart Chain, TVL, flat. Avalanche had a big rally, but since it peaked, it's been flat at 12.25 billion. Solana had a huge rally, mainly flat TVL. Phantom had a huge rally, was flat, slight decline, but now more recently, if we zoom in here, we can very clearly see that TVL on Phantom is picking up. Not only is it picking up, but it's making new all-time highs. We're seeing value move into Phantom, just like we saw it move into Avalanche, just like we saw it move into Solana, just like we saw it move into Terra Luna. We're seeing Phantom pick up in TVL. Right? So I believe there's a very strong chance that Phantom is the next layer one solution to really push its way into the top 20, top 15 cryptocurrencies by market cap, right? If we just look at Phantom's fully diluted valuation of about $8.2 billion, and then you look at its TVL of $6.7 billion, you can see that it's really, really undervalued compared to the way that other protocols, other layer one protocols and smart contract networks are valued based on their TVL. Terra Luna has $19.7 billion in TVL, roughly 3 times the amount of Phantom. Yet Terra Luna has a $93 billion fully diluted valuation, right? More than an 11 times higher valuation. So let me put that very simply and very plainly for you. Despite the fact that Terra Luna only has 3 times more money locked up in its protocol, it is valued 11 times higher than Phantom. And that's not to say that Terra Luna is overvalued, because I don't think that Terra Luna is overvalued. I think that this means that Phantom, in comparison to the way that other layer one solutions are being valued right now, is actually undervalued. And if it were to catch up, we'd likely see a 2, 3, 4, a 2 to 4x, 3 or 4x. If we saw it just catch up to Terra Luna's value parity, its ratio between TVL and fully diluted valuation, we'd likely see about a 3x out of Phantom. So somewhere around $7 to $8. So I absolutely do think that Phantom can run and be the next cryptocurrency to the next layer one solution to reprice all the way up in this range, right? $6 to $8 um, as a layer one solution. All right. So that begs the question, where do we actually want to get into this thing? Well, it is running. It is running. And I actually bought some Phantom today on the breakout of this previous high. It took out this high of about $2.66, and I bought a little, right? Didn't go all in on it. This is just a trade for me. I want to catch part of this run, hopefully to $5, $6, $7, $8, right? And I know there's going to be resistance at its previous all-time high of $3.50, but I want to be careful, because if Bitcoin crashes and Bitcoin's testing 46K again, and if it drops below 46K, it could easily crash down to 42K, 44K. It could wipe Phantom down with it. In which case, I want to have some stable coins on the side to add to my Phantom position should it drop back to this horizontal support level. This horizontal support level is at about $1.90. That would be, again, on the top of this downtrend line. Right. So we want to look for it on the top of this blue downtrend line, which is already found support off of. We also want to consider a purchase if it were to drop to this long-term red trend line. This long-term red trend line has historically been a really good place to accumulate Phantom. Now, it did dip below this trend line, but this is a very long-term trend line, right? This has been a very, very strong trend line. And if we do see Phantom drop to it, you will see me buying and accumulating more Phantom in this long trade, right? So I think anywhere between this breakout here today and any retracement we get back down to this trend line is fair game for Phantom if you're willing to take on the risk, right? And you're willing to hold, and your thesis is in line with where I believe it's going to go based on its undervaluedness against other layer one solutions. So targets would be anywhere between like $5 and $8, which we can be more specific in picking once we see some more levels made, some more support and resistance levels made. All right, SushiSwap. Everybody aped into SushiSwap. A lot of people, unfortunately, aped in around $8 to $11 after it was already overextended. Guys, even when fundamentals change, even when things are really, really, really solid and look like they're not going to come back down, price gets exhausted. Profit takers, the people who bought sushi when it was originally breaking out of this pattern, this downtrend back here, $5.86, they, as soon as price drop comes up above $10, they've 2x'd in a matter of a few days, in a matter of like a week and a half, 10 days. They've been able to 2x. They're going to be taking profits, right? They're going to be taking profits. That's going to drive price back down. In order to get involved in sushi and feel comfortable with an entry point, right? Because sushi's looking really solid fundamentally. Maybe it turns around here, right? Maybe it does find support here and move upwards, in which case I'm personally not going to jump in. I want to be very comfortable with my entry points. Where do we have support? I want to be buying on support because that's where I would expect a bounce. We have support, our first leg of support here, between $7.63 and $7.90. And that's where I'm comfortable buying based on calculating the margin pressure levels off of our highs and off of our lows, right? That's where the incentives to buy on leverage and the incentives lower to sell on leverage to favor a bounce. All right. So yes, I'm giving you guys this level of $7.63 to $7.90. We may not get there. We may not get there, and people may be upset that sushi got away from them. But it's just not worth it, in my opinion, in a market that, again, I'll cut over here, in a market that is this volatile, up and down, up and down, up and down. I mean, we could fall out of this pattern. We could pump back to the top of this pattern. We don't know for certain what's going to happen here. So in a market that's this volatile, I'm not going to force a trade just because I'm FOMOing, because the fundamentals on sushi have changed a little bit. It looks a little bit better. No, I'm going to wait for it to give me a really good price that I'm comfortable with and would expect a bounce from. Right. So that's our first entry point. And then our second entry point, if it falls through this, where we potentially want to double down, is our previous resistance here at around 674 to 712. These, again, are margin pressure levels based off of our local low down here and our high up here. All right, Yearn Finance has already started to take off again. I've got some key levels to watch here. This is a bit of a difficult trade. So and I say difficult trade, I mean, I say that because it's already hit our key entry point here, right? So our all-time high was $95,000. That's going to create some resistance up here at the 2x short level at 47,500. So before we even get to 47.5K, we need to understand that there's going to be some resistance there. We can see that previously, right after we made this all-time high, this 47.5K level was very hard resistance. It's what, when we failed, sparked us all the way down to 26K or below 20K. Right. The reason this is resistance is because that's where you can start to short Yearn Finance. You can go short on Yearn Finance and keep your liquidation point hidden above that 95K all-time high. And that's a pretty safe bet considering most of the price action is well below this 95K level. So if we know 47.5K is going to be tough resistance, right? So we don't want to buy too much higher than 47.5K. In fact, we want to make Yearn Finance prove itself and go up above 47.5K. And then we'd want to buy 47.5K potentially as support. Similar to what we just saw with 28,278. This is the 3x long of our local low. That's where the incentive to long on 3x leverage increases. It's also very close to this kind of trend line. Right. So ultimately, what happened is we popped up to 37,700, our 2x long level. This is the level at which the incentive to buy on 2x long leverage dissipates. It caused a correction. The 3x long leverage incentives came back in down at 28,278. And that's where our ideal entry point would have been for Yearn Finance on this correction. Now, hindsight's 2020. What do we do now? Well, we want to make support on top of this 2x long level, which is on a shorter term time frame. If we zoom in here, exactly what we're doing. We popped up above it, and now we've tested it as support. This, honestly, not the worst entry point. I'd like to see a nicer, cleaner retest, a multi-day kind of spend a lot of time above this level and then retest it to buy. But it's not the worst entry point to grab some Yearn Finance, some YFI at 37,704 after we've made support. But keep in mind, we could very, very easily, very easily drop below and come back down to this trend line. And that's honestly where I would be a bit more keen to purchase Yearn Finance, down on this trend line, maybe a little bit above 28,000, maybe around 30K here if we can find a nice clean retest. Maybe we bleed off similarly to how we did before the crash in early December, but I wouldn't mind finding it down here rather than forcing a trade on a very short retest of this level. Alternatively, if this continues to run and continues to break out, let it run all the way up to 50, 60K or however high above 47.5K it goes, and then know that you'll very likely be able to buy the retest on 47.5K, right? But I don't want to play, personally, I don't want to play the breakout. I want to play the retest. Last one here is Perp. Perp is a decentralized derivatives exchange play that could, in my opinion, be huge in the future. We know that DYDX is already does a ton of trade volume. If Perp could capture some of that trade volume from DYDX users, it would be absolutely massive. This Perp is not something that trades according to technical analysis very well. It's very heavily correlated with the staking rewards, which are heavily based on the trade volume that's done on the exchange, right? So the price of Perp tokens are heavily correlated to the trade volume done on this exchange, right? So we can see at launch, right, we had basically what I'm going to refer to as trade volume down in this range, right? Then we had speculation bring it above this range. I want to be accumulating Perp. I think Perp is an accumulation play down below this range where we know that this token can trade. We know Perp tokens can trade between $11 and $26. And I think that the platform growth will exceed, and the trade volume will exceed these levels in the future, right? But right now, trade volume's a little bit low, in my opinion, to be accumulating well below $11. Right now, we're looking at about 9 cents. You can also stake Perp tokens for pretty decent staking rewards. Last time I checked, it was around 20 or 30%. I don't know what it is currently. Full disclosure, I own Perp tokens and I stake them, right? And I'm planning to continue to accumulate them under $11.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.